Today I'll be going through with you Bristol-Myers Squibb Company, and I just want to point out that if you just Google, type it in Google and click enter, you can see the name of the stock and you can see the symbol BMY. For one price for one stock is 45.99 US dollars, and you can see it's a billion stock. That means a big size firm. It's 3.5% is the dividend. Any company that pays dividend, that means that they are financially very strong, because after paying their loans, creditors, liabilities, they still have extra money left. That extra money they pay to shareholders as dividends. So any firm, if it's paying any percentage of dividend, that means you're financially very strong. So let's go to Wikipedia, and I want to show you when was this founded. Just look at this box, founded 1887. Brilliant. Now I want to show you one more thing, that please go to Justia Patents, and I want to show you that just paste in here and click, no, not that one, sorry, apologies. Just copy the name from Google and go to Justia Patents, and I want to see if it has any patents or not. So I'll just paste here exactly from Google, click enter. So I just want to show you that please don't concentrate on inventors, because these are people who invented but they don't have full rights. Concentrate on assignee or applicant, because these are people who have full rights of the patent, and that's brilliant. Now I want to show you one more thing, that so it has patents in 2005, 2006, 1992, 2012, 2016. That's a recent patent. Please look for, the more patents a firm has, the more stronger it is in market and it's harder to beat them. That's brilliant. And please look for recent patents in 2015, 16, 17, 18, because that means they're still innovating. So this is very important to have a look, go through the pages yourself, because it's a long list. Let's go to Yahoo Finance and see the key executives and the salaries that they are getting. So I'll just paste here, and if you're confused which one to click, just what I do is I just go to Google and I just click enter, and I check for the Nasdaq symbol, which is BMY here. So I'll just click on BMY only and go to profile, and then you can see the healthcare, the sector industry employees, and you can see all of their salaries have been shown, the key executives, except one which it says not applicable. You need to find out why it's not applicable, because the more information we have, the more you know transparent it is, and the more trust we're able to build. So you need to find out why it's not applicable. Now let's see what the employees have to say about this firm. Let's check the reviews in Indeed and see what the employees have to say about this. We have 1700 reviews and it's 4.2 star. It's brilliant. Read through the pros and cons as well and what people think about it, and check out the jobs they have listed, the questions, and the photos of the firm. And please check the reviews in Glassdoor as well. That's a brilliant website as well. And you can see we have 1800 reviews, 3.8 star. That's brilliant. And read through the pros and cons yourself, and look through the jobs listed, the salaries they're paying, the interview questions, the benefits they're giving, the photos of the firm, and everything. Now let's check the ratios. Let's go to macro trend, click price ratio, price book ratio, and paste in the symbol BMY and click there. And if the price book ratio is less than 1, that means the stock is cheap, undervalued, at discount. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. Right now it's 4.66, which means stock is 4.66 times more expensive to buy right now. In 2017 December, stock is 8.11, which means stock is 8 times more expensive to buy. So somebody who bought stock in 2017 December, they paid $59 to buy something that was only $7 worth. Right now, it's 4.66 times expensive. So it's still expensive. In 2009, if somebody bought in June 2009, they paid twice more money. So they bought stock for $14, which was only $7 worth. But right now, it's 4.66 times more expensive. And let's go to other ratios and look at current ratio. If the ratio is less than 1, that means stock is risky, because liabilities are more than assets. If the ratio is 1.5 or more than that, that means stock is safe. It has a good margin of safety. So let's look. Right now it's more than 1.5. Stock is very safe right now. It's more than 1.5, more than 1.5. So it's mainly consistently, except once or twice, but it's mainly, for most of the time, it's more than 1.5. So it's a safe stock. Let's go to debt equity. This ratio will tell me if the stock is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that for it to be brilliant. Let's look after it loads. Please let me know if you have any questions for me or if I'm going too fast. I'm going through the video very fast. Please let me know, and if you have any questions or if you want me to make tutorial on a particular stock that you're researching right now, please let me know. I'll do that. Or if you want to share your own research based on this stock with me, please let me know. And please and also if you want to connect with me, please subscribe my channel as well, and write your comments as well, whatever you think about this. Be patient with this website because sometimes it takes time to load, but that's fine because it has a lot of ratios in it, so it will take time to load, but it will make your life quite easy. Right now we're looking for 0.5 less than that. It is more than 0.5. It's a dangerous stock. And if you just see, it's more than 0.5, and not only that, the debt is a lot more than equity. Just see vertically up. But if I just see that since I can see since 2007 September up till 2019 March, it's 0.5 or less than that. So it's a very safe stock in terms of debt equity. But just recently they have taken in June debt. They have taken more debt, but the amount of debt they have taken is a lot compared to equity. So it is a dangerous stock right now. So let's go to return equity. I'm looking for 8%. I'm looking for 8% or more than that for it to be ideal. I'm looking for 8% more than that. It is more than 8%. It's brilliant. Let's look at the previous thing as well. Has it ever been below 8%? Yes, once or twice it has. But then let's look at the majority of time. It has always been above 8%. So once or twice it's below 8%, but that's fine.